Welcome to the Big Mike Fund podcast, where you'll learn about advanced wealth building strategies from real estate investing to creating massive ROI and secured retirement profits. So pour yourself a cup of coffee, grab a notepad, and lean in, because Big Mike has got the mic. Starting now.
Welcome to the Big Mike Fund podcast. I'm the Big Mike.
Mike Zlotnik, and I'd like to welcome back Andy Gurczak. If I'm pronouncing it correct, if I'm butchering you up, forgive me. I've tried a few times. He originally is from Poland, right? It's a Polish. His family is from Poland. And remind just a couple of words about you, when you came to the country, a little bit of your story, and then we'll jump into insurance adjusting. This is your great expertise, and we'd love to hear what's going on. It's a very hot topic given what's been going on with the natural disasters and all the crazy stuff going on.
Mike, thank you, first of all, for having me on again. So I think it's been about a year since I was on your show. So I've listened to your other episodes. I appreciate it. For your listeners that don't remember, yes, I did grow up in Poland. We immigrated when I was a little kid. So pretty much grew up here my entire life, and then got into this adjusting industry. Now it's almost 15 years. It's been a long time that I've been in this industry. And all we do is advocate for the insured. As we discussed previously, we represent the insured. We make sure they get paid fairly and they get all their money from their claims.
Yeah, I appreciate that. It's a very important function. Insurance companies nowadays is looked at as a million-pound gorillas. We have been charging higher and higher premiums. We've seen massive insurance premium inflation in the last couple of years. I don't know how to put it. Everyone is complaining about it. You've got huge premiums if you are in a natural disaster zone, some even uninsurable. Some properties you just can't get even insurance. And then it gets worse. You pay for the insurance, and insurance company fights you ultra hard and doesn't want to pay. So this is where you come in. And so give us a little bit of the basics on the process. So let's cover residential and commercial. The question is to you. Do you work in both residential and commercial? And what's the big difference today? You're seeing drastically different results in residential versus commercial. Residential, you're dealing with the, I guess, small-time owner versus million-pound gorilla. In commercial, at least the owners have more resources typically to fight a little bit harder. But it's also an issue of, need for cash after an event, and liquidity can be tough. So give us your lay of the land.
Yeah, so we cover both residential and commercial. Our specialty is large loss, Mike. I think we discussed it. Large loss, we really help people in claims about 100,000 and over is kind of our threshold. Now, I'm not saying that we wouldn't take claims smaller, and we do. We have a large amount of clients that keep coming back to us that own large portfolios that have claims throughout the year. Then we just end up handling their own entire portfolio. The difference between residential and commercial in our eyes is the type of clientele. Residential, most of the time, and I'm speaking residential, you get the homeowner that has kids, maybe a dog, animals or pets. They're a different story, right? Because they want to be in their house as soon as possible in most scenarios. So they kind of have a different perspective. Whereas commercial or, investors, landlords are more looking into, they have their own contractors. They have all their own vendors. So they really want to get every penny and kind of have more time for us to work the claim. That's kind of the difference in how we see it, both residential and commercial.
Interesting. So yeah, priority-wise, of course, you have a house, your home where you live. If you had a fire event, then you got to get in as soon as possible versus commercial, of course, you got to.
It's something to keep in mind, Mike. The insurance company's position is always go as fast. Like, they tell you get a contractor, go throw stuff out. They want you to move the claim quicker, because the quicker you can move a claim, the less it mitigates their payment. So when we come in, we want to make sure that we're taking our time so that our client gets maximized in all their payments. Which again, in some people's case, with families, they don't have that time. They don't have the resources. So they're in a much harder position than investors and landlords.
Yeah, my observation is, again, you could tell maybe it's a little different in the residential. In the commercial, the goal is to delay. The insurance companies, they just try to delay, bleed you, and then you take a lesser
until you accept it.
Yes, with the residential, it's a sensitive issue because politicians can get involved if somebody lost their home or insurance companies making it difficult for them to get back home. Maybe it's a little bit of a different type of feel. So let's go to the basics. If you're engaged as an adjuster, and if I forgot to mention your company, AllCity Adjusting, right? That's the website, allcityadjusting.com. It's on your on your sweatshirt or T-shirt.
It's all over behind me somewhere too.
Yeah, so I just want to make sure I give you the credit.
Thanks,
your website
Mike.
and company. So when you are engaged to represent the insured, how do you go through the process, and what kind of basically how much you improve typically results versus your fees? Real basic question, because people ask, why should I pay when I can just file a claim directly? It may be the same experience as when you are an accident and you hire an attorney, and the settlement could be way higher versus what insurance company could offer. So I'm just curious, how does it work? What is the industry?
Yeah, so our fee, for example, starts at 10% and then goes up from there depending on the claim. And then the return, you have to look at the return on your money, right? Not only does your claim get expedited quicker, not only do we protect you from saying the wrong stuff and potentially denying your claim, but then the best is we maximize each coverage you have, and we maximize your position in each claim. So the return on your investment is so much greater than working your claim on your own. Even if you think that the insurance is going to help you or take care, there's no better return than having a public adjuster handle the claim, especially the right one.
Yeah, and it's almost common sense. And we've used public adjusting in the past. It improves your chances. Now insurance companies dealing with a professional representation. It's almost like you have an attorney in an injury case.
We basically are. We're not we're not an attorney, and we don't pretend to be one. But we are the legally party that can represent the insured in each state that we're licensed in. So yes, before it has to go to litigation, we can do everything except then go to litigation. So we are their legal representative for their claim.
Yeah, understood. So do you have any cases you're working on right now with the natural disasters? I'm just curious. Again, I don't know if you're working in these states where there have been hurricanes, tornadoes, hail events, or like a fire in California. I'm just curious if you've seen, if you've had exposure to any of those cases.
So we have a few in North Carolina, Florida. That's all hurricane. So then we're dealing with flood, FEMA. You're dealing with the primary. There's a couple in those instances where the insurance might maybe want to file with the primary carrier or their home carrier. But when it's just flood damage, you can only go with flood. So you're dealing with FEMA, you're dealing with their adjusters. That flood insurance, that's a bare bone policy. So you really have to do, I know how hard we have to work in our team to put estimates together and put stuff together, because there's a list of stuff they don't pay for, right? Most homeowner puts you back in, every homeowner policy indemnifies you. It puts you back in the same position that you were before the loss. So they're supposed to. Well, with flood insurance, it's very basic, right? They're paying for the basic stuff like to hang the drywall, but not to patch it, paint it, for example, stuff like that. So you have to be careful how you phrase stuff and how you put an estimate together if you're going to maximize the client's damage. And also they don't have additional living expenses, right? So now that they can't live at home, they have to pay out of pocket to live somewhere. So it's very stressful. It's even harder than a regular homeowner's policy. That's flood, that's hurricane. And when it comes to California, what we're seeing is either we're getting calls and we're looking over policies and the clients don't have fire coverage. So they've had coverage, but not fire. That was removed from the policy.
No fire coverage. Is the primary purpose of insurance is typically fire.
Mike, that's a great question. I don't know, but we get calls every week with people that send us policies that don't have fire coverage. They have coverage, don't get me wrong, but they're not covered for fire. Whether it was removed a month ago, 2 months ago, a year ago, we don't get in detail. But if we see that where it says there is no coverage for fire, there's nothing you can do. You can hire an attorney, but you can hire the greatest person in the world. No one can help you. You didn't have insurance. And then the people that do have insurance, well, then now you're coming into place where the whole house is burnt to the ground how do you put an estimate together, right? How do you build a personal property list with nothing there? So now you have to play detective through photos and maybe old listings on Google and stuff like that.
Yeah, understood. It's a tricky situation from the point of view that, yeah, if you have no coverage, it's terrible. I was reading an article a little while back after the fires happened, with the Pasadena, Altadena, and Pacific Palisade in California. And State Farm apparently pulled out of a lot of policies that were renewing. They were basically either canceling them or removing fire risk or something. So there was an observation where people could have been kicked out from the fire coverage a few months before it actually happened. That's the crazy part. And
a lot of those policies I just mentioned are State Farm. Now, not only, but a lot of those policies are State Farm, where there's a little. If I sent you the policy, you would not find it. It's written in a certain position in a very small letters.
Small letters, yeah. So it used to be covered, and then they start changing it because they foresaw risk, and then people renewed. They didn't even realize that they were renewing. Now, major element of coverage was removed, and even mortgage lenders who try to require coverage, they didn't even have time to even notify. And then procedurally, you get renewal notice, the whole thing goes through the process, and you lost the coverage. The mortgage company might not realize it for quite a while. Meanwhile, if the State Farm washes their hands, should almost be illegal in essence. I don't know if the state is going to sue them and force them to cover it, especially if they pulled out a few months before.
And it should be, but and if that does happen, right, where a bunch of attorneys come together and there's like a class action lawsuit or something, or the state sues them, the only people that are going to win, me and you both know, Mike, are the attorneys and people involved. Because the homeowners, by that time, all that money trickles down. They're going to get shortchanged anyways. They're going to get very little by that time. Their house is gone, their property's gone. Yeah. So unfortunately, Darren, when we get those calls, it's a crappy call when someone sends you all their documents and you can't do anything. There's nothing you can help them with.
Yeah, it's a very sad situation. Understood. All right, on the commercial front, of course, situation a little different. One of the gigantic problems in the commercial, insurance, I mean, it's both commercial and residential. The premiums have been skyrocketing.
Yes.
Premiums have been skyrocketing. And even in the regions and areas where the events were not happening. So insurance company could have taken losses in one market and they're raising premiums in multiple markets. Are you seeing any of that? And then payment of claims. Again, I guess it's the quality of the company, right? Depending who is the insurer. So there's a better companies like Chubb who's supposed to pay actually, and there's the other ones who do really good job marketing. But when it comes down to payment, it's a constant battle. So the least expensive policy is typically more difficult to pay. I'm just curious, any comments on this? Are you seeing more success? What leverage do you have over these insurance companies? If you believe you're right, they're wrong, is this pretty much you build the case and then hire an attorney and you got to sue them to prove that they owe you a bunch of more money than what they're offering to pay?
Yeah, so to start out with premiums, even from our own experience, we have commercial, we have residential, and we've seen premiums go up on all. We have a commercial building that we're having a hard time insuring. We had an insurance company for 5 years that said they won't renew with us. And it's a mixed commercial. So there's commercial and there's residential on top. And we're having a hard time finding a carrier. It's unbelievable. Some premiums are out skyrocketed. And we've seen that on all our properties, whether it's hard to insure or just no one else wants to insure, or the premiums are just going up. So I see it as an investor as well, not just from the claim side. Now, regarding claims, yeah, I've been saying this for years that the claim handling and the insurance companies, it gets worse every year as it goes by. Right? They're hiring more consultants. They're bringing in more people. They're having more. They're trying to have more eye for denial than eye for coverage. And they're looking for ways they can prolong a claim, delay it. I mean, there's a book about it. You're probably familiar with it, Mike. Delay, deny, defend. And that book says it all, right? That's the claim process. And now it's just been more and more, whether it's because there's so much catastrophes and so much payouts, where they're just trying to see, okay, how long can we delay these claims? Because 90% of people that get their claims delayed, there's been studies done about this. So it's like over 90% of people that claims get denied or they get lowballed, they just accept it. Only a few, like 5% of people actually hire a public adjuster or hire an attorney. It's a very small percentage. So those other 90% of people just accept that lowball offer and just take it.
Yeah, that is a terrible state of the matters in this industry. Insurance companies.
I mean, I remember looking at a claim like where it was a commercial building, and the insurer, an older gentleman, said, we looked at the claim and we said, you're way underpaid. There's so much more you have damage. And he literally said, he's like, I've been with this agent, I've been with this insurance, I don't need any more money, I'm good. Took it. I mean, it was hundreds and thousands of money that wasn't paid to him. So
yeah. That's the observation. They either lowball and people are willing to take it and move on, or
yep.
like you said, delay, deny, and defer, whatever the third term.
But no one wants to go to litigation, because by the time you go to litigation, that meaning your damage to your property and everything, that sits there, right? Because you can't touch the evidence. So now your claim sits there, whether it's fire, water, just rotting away, and you got to move on with your life. You got no money, and by the time the settles, you're getting half that claim amount or less.
So hold on, let's discuss this a little bit. So say you had a damage, whatever it is, fire damage, flood damage, whatever it is, and the event happened. Company hires you. You represent them, not the company, but the owner,
yes,
either
understand,
corporate or individual, and you build a case for them, and you represent the insurance company has their own adjuster. You're a public adjuster representing the owner, and the information gets submitted. Meanwhile, how long does it take before any action can be taken on the property? Either you can agree to what it is, or what if there's a significant difference in opinion? Because basically, if it's residence, if it's home, it's home. People need progress.
Yep.
Right, as you said, some policies don't even cover living expenses outside of the. So somewhere they are now displaced, living with relatives, living in a hotel or something, right? So how does this whole process go? How long it takes, and then are most claims just settled through these balancing act between your representation of the owner versus the insurance company adjuster? Is this the most typical outcome? Because litigation is exactly what you said. It's multi-year. There could be appeals. It's a delay. It's a gigantic delay type of strategy for insurance companies.
Yeah, Mike. So again, going back to that homeowner, landlord, commercial, that difference, right? They know, with the homeowner, because everyone's first question when they hire us is, how long is this going to take, right? A commercial person, a landlord, if he has a good policy, most commercial or landlord policies, investors have a loss of income, right? Or loss of rental, business income. So they can wait longer, right? They can say, okay, if it takes 4 or 5 months to settle and keep going and fighting them, fine. They're claiming
There's
money
coverage for the loss of
There's coverage, right? So you have, let's just say you have 24 months, right? So you're like, okay, even if it takes 6 months or 8 months for us to get the final number that we need to, that you're owed, you're okay with it because you're claiming income. So that doesn't, but let's just say you and your 3 kids and your wife are out, you only have so much coverage for living somewhere else. You're in a hurry, right? And then you still got to rebuild your home. So you're more under pressure, and they know that, right? So we try to go as quickly, like we build our file as quickly as possible, and we try to exhaust every option, right? You have us. If we can't get it negotiated, we can go to appraisal process. Each policy is an appraisal process. And if that doesn't work, then your only option is litigation, and that can take years.
Yeah. Litigation.
I just, there was a documentary. I'm sorry, not a documentary on CBS. Is it the 60-minute thing? And they were talking about one of the hurricane victims from an old hurricane. Their house is the same way it was from the hurricane for like 4 years, just standing there. They're still in litigation. They haven't been back to the house. The house is standing. Pieces are hanging, doors are hanging, everything's hanging, just like it was after hurricane.
Yeah, I remember even in the commercial space. I mean, we had files, properties hit by a hurricane, and the insurance company creates an impossible battle. Basically, you as the owner of the property, if you don't take a reduced settlement, just the delay and the fact that you still have to pay the mortgage. You lost part of the property you lost the income from the property, even if you had some coverage. You just can't tolerate it long enough. So it's
So something for someone listening that's a homeowner is if you have a fire or water where you have to relocate, the insurance company will pay you for the new building or the new place that they put you in and the furnishing and all that. But your mortgage is still on you. So, like for example, people in California, if they have a $20,000, $10,000 mortgage with taxes, the insurance company is paying now for them to relocate, but they still have to come up with that monthly
mortgage
income, even though
payment.
they're not. Exactly. Yep.
Yeah, it's a horrible part because you're no longer enjoying the house,
Correct.
but you still have the liability of the mortgage. And I don't know what mortgage companies,
But let's say it takes 8 months to settle now, right? So now it takes 8 months to settle,
and then
and
they
for eight
build and
months
rebuild.
and
It's another
rebuild
year
another.
to rebuild.
So now you've been paying mortgage and taxes for those 2 years or a year and a half out of pocket. Yeah.
Yeah, it's a huge practical problem. Yeah, and the whole insurance business is gotten very difficult. And I don't know how it looks from the insurance company perspective, but it feels like they maybe the losses they've taken are so large that this is the only game in town. In parts of
Yep.
Florida you can't insure. There's other parts of the country where you just can't even insure. And then you have a state um, mandated a state available policy, and those policies are pretty crappy. Premiums are high, and then from what I heard, these state policies are not good at all. So
Correct. Yeah, and so I can't speak from the underwriting from that side because we don't see that side. So all I could say from experience is, yeah, we see our premiums go up. We see how hard it is to insure our own buildings, and we're having that same issue. Even the business, we've never had a claim on our business, and had a hard time getting insurance for our business. So we know what's going on that side. But we do see the claim side, and that claim side working on your own, even thinking that you're going to handle it on your own, you have to be wary because if it does go south and you do have to go to litigation because it's too late for a public adjuster or appraisal, remember the litigator, the attorney needs a file. You just can't say I want to sue them without having some kind of background. So part of what we do is not only fight the insurance company, present everything, but we're building a file as we go because if it does go south, we have that ready, and the attorney can take that, and it's an easier battle. There's proof of bad faith or any other legal recourse that the attorney can take.
yeah, that makes a lot of sense. It's almost unthinkable. You can't possibly sue without a file. To build a good file,
Correct.
you need a good public adjuster, and because of the time it takes, and people have busy lives, and yeah, you have a massive disruption in your life with a event. You almost I can't see why anybody would not go with it without would go without insurance adjuster. It's almost a critical piece, and most of the compensation, as you said, it's contingency based, right? It's not upfront.
Yes.
You're not
No, it's
asking. So
contingent. It's once we finish everything, once we settle, once we get you with the client paid, that's when we get paid. There is no retain, there is no upfront cost as you go. So you have nothing to lose. You only have something to gain.
yeah, it's absolutely it's a win-win to use an adjuster, special experienced adjuster that can help maximize recovery because it's difficult as is, and without one, it's unless you're in this business or you have a close friend who is in this business, you can make a lot of mistakes. So
Let me give you an example. So we just finished. There's a large fire. It was a residential fire, but it's an attorney. The gentleman's actually an attorney. It was a large fire. We had 3 people there, maybe 4 weeks, inventorying everything top to bottom of the house, meaning digging through the fire because they deemed everything a total loss. So our list is going to be around 850,000 of how much stuff there was in the house, just not the structure, just the personal property, right? Now we have a similar claim that we just got. This client already had the insurance come out and do the inventory. Same house, same amount of items, same square feet. Maybe some stuff's not as valuable. But do you know the list they got offered from the insurance company? $30,000.
Insane difference, yeah. The insurance companies is going to do nothing other than say, hey, there was nothing in the house was empty.
Give us
and you're
give
saying,
us a
hey,
list.
we live
Well,
here,
they're going
we
to say
have a lot of stuff.
they're going to say, give us a list, right? Or we're going to send our vendor, and their vendor doesn't get paid to write a list. So they're going to put a quick list together, and that's $30,000.
Yeah, understood. And I
That's
guess
the difference.
it's part of the policies. As folks review their policies, they should be, the folks should pay attention to the personal property items, because most of the insurance covers reconstruction of the property, but they don't really have robust personal property policies. But yeah, I mean, you're right. It could be a huge list. Depending on contents of the house, could be easy
Oh,
half
that list,
$1 million dollars.
easily that list that's over $500,000 personal property list that we're going to be working on.
Just the basic stuff, just the basic, not probably not even a fancy house with the top end,
You don't need, Mike. You don't need fancy stuff to get to $500,000 on the 4,000 square foot home. People, it's underestimated how much stuff there is in the home, and stuff adds up really quick. You look at a room, 12 by 12 room that you're sitting in, and you look around and you start adding up every single thing, every picture frame, everything you got hanging. It starts adding up really quick. All of a sudden, you're 10, 20, 30, $50,000.
Makes a lot of sense. So, what's the again? There's nothing to do proactively, right? People just have to keep your information handy when something happens. Because I'm thinking, do you have any advice, suggestions to both residential, individual folks who own their homes, and commercial? What should
Yes.
they do better now before any event? Because once you have an event, it's too late to do any preventive forward type of protection. Is there, is this an insurance policy review? Is this should you have, review the carbon monoxide and fire alarm detectors? Just from your perspective, what you're seeing out there, to help folks either prepare if, God forbid it happens, and be in better position, or obviously, like what you just said, review a policy if you have fire coverage. If you don't have that, big problem.
You named it, Mike. You named it. It's review the policy. Send us a policy. We don't charge clients at all, not a penny. No matter if it's 100 unit, 1,000 unit, single family, to look over a policy and see if there's the right coverage, if there's anything missing. Just look it over, give advice, explain what's missing or what should be added to the policy. That costs nothing, and we do it all the time for our clients, especially for some of our larger clients. That's as proactive as you can be, or have your agent just double check and ask him what's missing. Is there anything else I should have on my policy? Other than that, no. Then the second thing is, as soon as you have a loss, don't wait. Don't wait a day or maybe I'll meet with the adjuster on my own and I'll call a public adjuster after. As soon as something happens, that's when you want a public adjuster to step in and discuss everything with the insurance company. That's how important it is that they communicate and not you, because the wrong thing that you say can harm the whole claim.
Got it. So how would folks reach out to you? What's the best way to reach out to, have your phone number, your website as quickly as possible, and have a good adjuster in mind?
Mike, yes, they can look us up at allcityadjusting.com. That's our website, or just type in AllCity Adjusting. But for your listeners, again, I'll leave them with my number, which is my direct line, which is 708-655-4186. That's my direct line. They can call me anytime. But if they Google my name or AllCity Adjusting, they'll find a bunch of information, other podcasts, other YouTube videos. And I apologize for your listeners that I'm stuffy. That's probably not my normal voice.
Well, hope you feel better. Yeah, it's okay. We're all human. It's kind of, we're recording this in the middle of the winter. The weather is cold. People get a little bit under the weather. So feel better. Appreciate you sharing. allcityadjusting.com. And do you work many markets? Do you work all markets? Just curious if this, what are your, biggest areas?
Yeah. We cover 40 states, Mike. We're, I think, 41 now, states that we're licensed in. That we have, I think, 6 offices throughout the states. Since we do large loss and specialize in large loss, we have a team that we deploy into large loss state wherever we're covering, so we're able to cover. If we're just doing smaller claims, it's harder to leave a certain area, but because we do large loss, we're able to cover a lot of territory.
40 states is a pretty big footprint, so people could call. Worst case scenario, you're just going to hear, hey, this is not the state we work in today. But
yes, I think the 40 major states that have claims that have stuff we're in. So
let me guess, is one state maybe you don't work in. Do you work in Alaska?
We don't have a license in Alaska. No, we've never had a call in Alaska. How we grew actually originally was because originally our clientele was investors, landlords. Well, when an investor had a loss, here in Illinois, Indiana, somewhere in the Midwest, all of a sudden they would say, well, we just had a fire, we just had a water break in Tennessee, in Florida.
You expanded just naturally.
We just started expanding. It was natural. It wasn't forced that we wanted to be in every state. It was a natural progression with our clients. As our clients grew their portfolios, so we grew with them. And that's how we got to wherever we're at now.
Yeah, it makes a lot of sense.
So no, Mike, but if you have something in Alaska, let me know, and I'll make sure we're licensed there and get ready if something does happen.
Salmon fishing. That's about it. Thank you, Andy. I really appreciate your wisdom. Thank you for coming on a podcast, and feel better. Get well.
Thank you, Mike. Appreciate it. Thanks for having me again.
Thank you for listening to the Big Mike Fund podcast. To receive your copy of Mike's How to Choose a Smart Real Estate Fund book, head to BigMikeFund.com or visit Amazon and type Mike's slot name. Keep listening and keep investing Big Mike style. See you on the next episode.